Hey guys, welcome to Tan Investing. If you're new here, welcome. In this channel, we will look at investing, savings, Canadian growth investing, Canadian value investing, Canadian dividend stock, along with personal finance. If it's something that interests you, please don't forget to subscribe by clicking the red button at the bottom. Let's get started. Today, we will be looking at investing for beginners in stock, 10 things that you need to know. So, first is that don't let your emotions rules you. Perhaps that might be the number one investment rules when it's emotions. There's a saying that fear and greed rule the market, which is true. Investors should not let the fear and greed control their decision. Instead, they should focus on the bigger picture. Stock market returns may turn wildly over short time frame, but over the long term, historical returns for large cap stocks can average about 10%. Patient investors may benefit from the irrational decisions of other investors. Quality matters. At the end, if you produce a lousy product, people won't buy it from you. So buying a large cap will help you on the long run because large cap has proven to be in the market for quite some time and they would have a large, more historical informations that you can go back to. And um, don't invest in an industry that you don't understand. It's like skipping through the minefield. Either stay away from companies and sector that you don't know, as well as know your spouse's name, or find good analyst who does. So basically, the more of this information is just telling you that you should know where you're investing, what industry you're investing, understand the industry so you know how it would work. Rapid growth can be a bad thing. So CEOs was growing fast with quality suffered, and it was a downfall. So don't be taken by those big revenues, profitability growth, because underlying quality of the company's product and operation is a lot more important. Just because, for example, there's a lot of cars in a supermarket parking lot doesn't mean the supermarket is making money. It might mean that the price are too low to make good margin. And a lot of ad pages on a cheap newsprint might mean the poorly managed company is trying to grow out of the quality problems. So sometimes what you see on the TV media, it might not be something to fall on. You should be doing your research before you get into it and purchase that specific stocks. Investing all of your money in a stock, in one stock, is very risky. So there's no reliably predicting which company will be overnight success. If you guess wrong, you may lose all or some of your money that you invested. It can be tempting to go all in on a promising young company that you think might turn into next Apple or Amazon, Tesla, or anything, right? But sometimes that doesn't happen. Investing all of your money in one single stock is a risky proportion. Don't buy high and sell low. Many people instinct tell them to buy stock after a day or a week where they have done really well. Stock have gone up 10% in the last quarter. They might be hot and should buy it. Unfortunately, that is the buying high. On the other hand, people often instinctively sell when an investment drops rapidly. They see losses over the last month and quarter, and then they get scared and panic. And that's selling low. So buying high and selling low are strategies that are going to fail you over and over again. As a better approach, ignore the lows and high, buy a little bit each week, each month, each year, and then sell when you need it to. Consider lower dollar cost averaging. Dollar cost averaging, you can protect yourself from the risk of investing all of your money at the wrong time by following consistent pattern of adding new money to your investment over the long period of time. By making regular investment with the same amount of money each time, you will buy more of an investment when the prices is low and less of the investment when the prices are high. Individuals that are typically make a lump sum contribution on the individual retirement account either buys it at the end of the calendar year or or on a specific time frame, especially on a volatile market. For most people, smartest stock investment is index fund. If you are not sure how you should invest your money, index funds are usually a good option. Index funds might not see the dramatic return that investing in an individual stock might, but they are also a lower risk investment. Index funds usually have a lower fees, which can have significant impact on your investment over the long term. They match the market, reducing the need for research, studying, guesswork when it comes to investing. Thinking about historical return as a measure for future performance, one of the most common mistakes while investing is relying on historical returns. Past returns are often not accurate indicator of the future performance. For long-term investor, predicting the market is not practical, and they should not be attempting to do it either. The goal should be to build portfolio with a long-term investment horizon, with historical performance only serving as risk indicator for an asset. The last thing is failing to diversify enough. So diversification is in investments. It simple means having your money spread across a lot of different things. Ideally, you're spreading your investment money across completely different types of assets, cash, bonds, stock, real estate, maybe things even like precious metal and collectibles. The reasoning is easy. Just because one of those things drops in value doesn't mean that the others will. So if you have the money spread across all of those things, you won't suffer. Say the stocks market takes a dive. Some things even works in reverse. For example, historically, bonds do well when stocks take a dive, and vice versa. The problem is most people don't diversify very much, especially when it comes to things that that most important, like retirement savings. Hope you guys enjoyed this presentation. Please check out the other videos if you want to see any other videos. Please let me know in the description below if you want me to do any other type of video like this. I do want to expand my knowledge in Canadian market, investment, finances. If you want to let me know anything to improve my channel, please do so in the comment section below. Thank you so much for taking your time and watching my video. I'll see you guys on the next video. Take care. Bye.